Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. In this 2 cents episode of the podcast, I'm Pete Wargent, joined by Chris Bates. Batesy, how's your week been?
Life's good, Pete. How's things on your end?
Yeah, pretty good. Like everybody else, just trying to get everything done before Christmas. Kids are starting to count down the days, and I've got to think about all the things I'm supposed to be doing, catching up with family, getting presents. Meanwhile, work is continuing. It looks like it's going to go all the way through to Christmas this year with the housing market, as you've mentioned on previous episodes. So, yeah, like everybody else, just juggling a few different things, but can't complain. How about yourself?
Well, life's good. It's summer, isn't it? Just my daughter's learning how to swim, so it's pretty cool watching her in the pool. Actually, at the moment, she's swimming without a floaty, so that's pretty exciting in our household. Going to Thailand in a few weeks, so for a month. So that's going to be.
Oh, those are precious moments. I remember when my daughter learned to swim when we lived at Sunshine Beach, and we had a pool in the back garden there. It's very disconcerting as a parent, but they absolutely love being able to show you swimming across the whole pool. It reminds me of those episodes of Bluey, though, when the dad forgets the towel and the sunblock and everything else. It's kind of very true to life for me. So, yeah, exciting times.
Yeah, it was 1, 2, 3, go yesterday. Ready, steady, go. And, I just let her go and just fingers crossed she wouldn't sink. And she was making it across the pool. So, yeah, very, very happy. But, yeah, working flat out till Christmas. We're absolutely seeing buyers are still there. People are still wanting to transact, but, listings are really drying up now. I mean, pretty much nothing's coming on, and, we're not going to see much. It'll be interesting to see if we see much in January. I was talking to a couple of agents in the last, couple of weeks, and they're both saying they're going to list things a little bit earlier in January. So that's going to be interesting to watch. But it's likely till Australia Day now, which is like a good 7-8 weeks. That's a lot of new buyers entering the market. And I think that last rate increase probably took a bit of sting out of the upgrader as well, because they were like, well, where a rate's going to land over the next few years, maybe we should wait and see, which is going to create this real conundrum, this problem that we've seen over the last 2 years where there's just very little stock, but buyers are still building, and their confidence comes back faster than sellers. So, yeah, interesting space over the next 2 months to see what happens and how much heat the market comes back in February.
You're right. It's a bit like the old pipeline thing. I think we had 3,000 auctions this week, and there's 2 more big auction weekends to go before the Christmas wind down. But, after that, then there's a big sort of dry spell where not much really happens. And, there's a lot of water to go under the bridge between now and February. As you said, though, there's a lot of people looking for new listings coming on to the market, and there's just not much quality there. So, a bit of a backlog, I guess, building up. So let's run through these top 3 news stories of the week. So firstly, rezoning changes in New South Wales, something we touched on last week, but we'll drill into a bit more today. Secondly, the global inflation pulse has certainly started to fade over the past month. Big change, big shift in what markets are pricing for the year ahead. Maybe a bit less so for Australia, but certainly globally. And thirdly, is the housing market limping into Christmas? Yeah, I think it is a little bit for some of those auctions. I think that's seasonally normal. People get a bit of fatigue. And also with a few thousand auctions in a week, the buyers get a bit more dispersed, and you do have that seasonal slowdown in price growth. But in saying that, prices are still up quite significantly in places like Perth and Adelaide and Brisbane. So maybe that's a bit more of a big city story, perhaps. So, Chris, let's start with this first news story then. So New South Wales rezoning changes. So just recently, just over the past week or two, the state government announced that they're basically going to upzone more or less everything within an 800-metre radius or an 800-metre distance of train stations. And the default will be, I guess, 3 to 6 stories in the R3 zoned properties. And then for buildings in the R2 zoning, townhouses, small apartment buildings. So this is something that people have been pushing for quite hard. A lot of economists have been very vocal on this, and suddenly we've got some movement from the state government. I think this is expected to create the potential for 112,000 new dwellings over the next 5 or 6 years. I guess that would cover not just Greater Sydney, also Hunter Valley, Central Coast, Illawarra. But that's a big chunk of the nearly 400,000 dwellings that New South Wales wants to see built between now and 2029. So potentially some movement there, which might just remove some of those bottlenecks to new supply.
So I think this is a bit of a circuit breaker, really. I think this is something that people have wanted for many years. The NIMBYs, the anti-development in their backyard have really said, well, heritage overlays, or it's going to do shadowing, or it's going to affect the streetscape, or how could we possibly, be denser? Our streets can't handle more traffic, or our sewer systems, etc. So there's been lots of reasons why development hasn't gone ahead. And the councils have basically went with the voters and said, well, I don't want to upset my residents. I'm just going to go anti-development. But I think what the state government's saying, that's not good enough anymore. If you're near transport hubs where there should be, less demands on, infrastructure, and they can rely on public transport, then we're going to have to get denser. Our city we can't have our cake and eat it. We can't grow our population from 5, 6, 7, 8 million. We can't be building new roads. We can't be, growing as a city unless we get denser. And I think they're basically putting a big warning sign over anyone who's living within 800 meters. That's a long distance away from a train station. That, the codings, the planning system's going to change, and that could affect your livability of your house. Now, I do think that the local councils are going to really fight back, and residents are going to fight back. But I do see this tug of war is really a door opening to what the future is going to look like. We're going to see more density, particularly around our transport hubs. And I think, I interviewed Melissa Neighbour. It's a pretty interesting surname. She's the head of Sydney YIMBY, or she's the spokesperson. I interviewed her a couple of weeks ago on the other podcast. And we were talking about this, and she was basically saying, upzone everything within, walking distance from the trains. And this is what they've come out and done. It's pretty crazy that it's such a big change. Now, whether this means more apartments or more density in the short term, I don't know. I think when you look at the cost to build an apartment, you've got taxes, you've got the minimum profit margin they have to make. The banks giving finance is really hard. People actually having the money to afford them, and the borrowing capacities. I don't think this zoning is going to lead to 130,000 more apartments on the market in a few years' time. It's just not going to happen like that. But over the next 10, 20 years, I think we're going to be getting more denser in our inner city locations, not just on our greenfield estates and in high density postcodes.
It's a good point. So councils across Greater Sydney could no longer just say, well, I guess as things were, if you got a 6-story apartment block nearby, you could just say, well, I object to this based on the height. But now councils are going to have to disregard homeowners' complaints for sort of low-rise apartments. So if they're within that sort of 1K or so within a train station. But I think, as you said, though, if you think back to the previous cycle, look, nobody was talking about a shortage of potential development sites. If you think about, you only had to go around somewhere like Parramatta or Wentworth Point or Blacktown or look, any number of places across Greater Sydney, and there was units going up all over the place. Sutherland Shire is almost unrecognisable in the space of one cycle. So, yes, I think, I guess all things being equal, or other things being equal, it removes some of the sort of roadblocks to new supply. But I think, as you said, though, people only really build when it's profitable to do so, generally, and people only buy when they have the capability to do so, and also if they think potentially that prices are rising, because people don't like to buy off the plan when there's a flat market or a downturn so much. So there's always a cyclical element to this too. And I think this has sort of led on to quite a bit of debate in recent times. I guess the test tube city is Auckland. So since 2016, there's been a lot of talk about whether the sort of large-scale upzoning policies in Auckland would create more affordable housing. And I guess this is where the cycle element comes into it, because for a period of time there, rents in Auckland in particular weren't increasing as quickly as in some other cities like Wellington and some of the others. But just in recent times, as international students have come back and immigration's picked up, suddenly NZ Herald reports in Auckland, we're seeing rents absolutely hockey stick upwards, up 8.5% between November 22 and October this year. And it's leading to actually young people now considering whether Auckland is the best place for them because rents are skyrocketing again. We had record net migration in New Zealand. So it kind of undermines the points a little bit. Usually with these debates in economics, you find that the truth lies between the two extremes. I think there's one side saying zoning fixes everything. And then you've got other side people say, well, yeah, but zoning in the long run probably doesn't make as much difference as you think. And I guess usually it's somewhere in between the two.
Yeah, I do think it's a thing we have to do. I think it's, city's going to have to get denser. We can't, what got us here is not going to get us there, I guess, over the next 20, 30 years. But I think it's going to be a watch this space and the fight between, it's one thing to say this and, to put it out there, but to get apartments built is another thing. And I think we're going to have to watch the story. I think the higher end part of the market, the downsizer part of the market, well, I think that's doing really well. Developers can make profits there, but whether they can make money building the cheaper end, things that we actually need for key worker housing, the more affordable part of the market, I don't know if that's actually possible for these developers right now, unless borrowing capacity goes back up, unless interest rates come down, unless building prices really stabilize, unless bank finance really relaxes, unless there's a huge demand for first home buyers back in the market as well. So I don't know. I think that, this desire to build 1.2 million homes over the next 5 years is just highly ambitious. And, we'd be lucky to build probably 800,000, I reckon. And so I think this is something to watch. And I think it's going to really lead to just further exacerbating this rental crisis and this affordability crisis as people are competing over very few properties available.
Well, yeah, there's definitely some challenges there. I think 1.2 million dwellings over 5 years. We've never done that before. And you would think if there's a massive push to try and hit some kind of arbitrary target like that, that would lead to potential shortcuts and defects. Certainly we saw that in the previous cycle. Interesting, we often think of Sydney and Melbourne as being somewhat dense cities because they're denser than other parts of Australia. But 75% of resi land around train stations is only zoned for single dwelling detached housing in Sydney. So in many cases, an entry-level dwelling costs $2 million. Yeah, it's an interesting point, though. If you rezone some of those areas, does the underlying land become more valuable to owners? I guess there's sometimes some unintended consequences as well. Anyway, I think generally it seemed to be a positive move because at the moment, we're certainly not keeping pace. I think Oxford Economics said we'd only see 150,000 dwelling commencements over this financial year. And that's at a time when population growth at various points over the past year has been running at 2,000 per day. So, I mean, it's absolutely massive numbers on the population growth side, and we've got a lot of building to do to keep up with that, I suppose. So, yeah, it's a bit of a watch this space, and I guess we'll see how it plays out. So, Chris, second story.
Yeah, and I think with the final thing on that is that, if we can encourage more developments for downsizers, that's not a bad thing, because downsizers will leave houses. If that house, because at the moment they stay in their house because they can't find, a bigger apartment that the grandkids can come to, that's, all the modern cons, that's still a bit bigger, that's, highly, it's a bit more luxurious than, the high density. So if we can build a lot more of those, that's great because it gets people out of houses. But if we then rezone the house to say, actually, a developer could knock that down and build 4, family suitable apartments, then, that's actually really creating a bit of a multiplier effect. And so I think the interesting thing with what the Sydney Yimbys and, anyone pro-development is fighting for is, more housing affordability, right? So they actually want prices to come down. And when you rezone, you actually don't really want to be the one buying in these pockets, right? So these are great for the overall macro story about supporting housing affordability and creating less rental crisis and, key worker housing. But that doesn't mean that you want to be buying what they're building in these locations. And this is a bit of the irony of the Sydney YIMBY battle is they're fighting for it because they're pro-development. But should they actually then, the people who want to enter the market, be buying in these postcodes and these pockets? Probably not, because they're going to be in areas that are going to have more supply and, more high density. And these are the type of investments that don't go up as much than something that doesn't tick that box. So, I think this is just something to watch. And I do think it's, unfortunately, the first home buyers who are really wanting this to happen, because they're thinking, this is my way to get into the market. Well, yeah, it is, but you're probably not going to get the best property at the end of it unless you go and buy something else.
Be a bit careful when you're buying off the plan, as we always say, I guess, on these podcasts. Lots of potential unknowns, I suppose, if you buy something that isn't built yet. So, Chris, second story of the week, global inflation pulse starting to fade. So some better news on inflation. We actually got this last week. There's a few different gauges in Australia. The ABS has now got a monthly inflation gauge. So that fell to 4.9% in October, much better than was expected by the market. And CBA economist Stephen Wu says we should comfortably see that beginning with a 3 by the end of 2023, I guess partly due to the base effect. And that's actually ahead of the Reserve Bank forecast. And actually this week, the Melbourne Institute put out its own inflation gauge, which fell to 4.4% over the year. And actually the core inflation, what they call the trimmed mean number, without getting too technical, fell to 3.8. So that's a 3 number already being realised on their gauge. I think looking ahead, the NRMA sees unleaded prices falling in Sydney down to the low 170s over the next couple of weeks. And I guess we haven't yet seen the impact of lower oil prices. So there's a bit more good news to come there. I think just looking globally, Chris, I saw in the Eurozone, inflation is down to 2.4%. It's basically vanished over the past few months. In the US, market pricing has gone bananas over the past month. We're now seeing markets pricing in 120 basis points of cuts for the US next year, which certainly points to a very sharp slowdown in the economy and inflation. And who knows? It seems Australia is a bit further behind on that journey. But just looking around the world, Canada, unemployment rate is now the highest in 22 months. And lots of data in Australia just pointing to a slowdown in the economy. Things like activity gauges, ANZ's job advertisements have fallen 8% in 3 months. So it looks like those rate hikes are starting to work. And as you said, maybe a slightly different story by the time February next year rolls around.
Yeah, I mean, I think you go back over the last couple of years and everyone was saying the Australian, RBA rate's got to go like it is in the UK. It's got to go in the US. It's got to go into the 5s. And we can't be, much lower than, where they are around the world. Obviously, our mortgage stress and the way that our home loans are structured isn't on 30-year loans. And, a lot of are on variable. So we're able to get that impact a lot faster. And we haven't had to go as high as they have. But I wonder if they start to really cut and we don't cut because we're a little bit on a lag in terms of our numbers. What does that mean for our Australian dollar? We become a bit more, attractive, right? Because we've got higher interest rates, and do we then have to cut really hard because we, have issues that are caused? So, what would be your take there, Pete? If we are see our inflation's a little bit slower dropping than it is around the world, but our rates stay a little bit higher, but everyone else is cutting. Is that going to put a bit of pressure on us to cut when they're cutting?
Well, the Aussie dollar actually already has risen quite significantly. It was up 3.5 cents, I guess, from the lows in very short space of time, just a few weeks. I think, I suppose here's the question, right? This is the $64 million question, is that if year-on-year inflation is still above target, but we're seeing the monthly inflation figures basically flat or even slightly negative in some cases, does the RBA sort of anticipate the slowdown? I have a feeling that having overshot the target quite significantly, there will be a reluctance to cut unless we have to. I think we're already seeing that. If you look at, for example, the APRA's settings, they've still got 3 percentage points lending assessment buffer in place. It doesn't really make sense. Nobody's expecting there to be a massive round or salvo of rate hikes from here, but they're just very keen to make sure that inflation expectations are bashed down all the way back to that 2.5% level. So I have a feeling there'll be sort of a long period where interest rates are on hold. I don't think they'll be in a rush to cut anytime soon, unless something really breaks. I guess that's the caveat. If the shit really hits the fan, then obviously things could change. But my gut feel is they'll be quite keen to see everything get back down and back in order before monetary easing comes back onto the table.
Yeah, and I think overall it's just good news that maybe that there's this soft landing idea can actually happen, right? We inflation comes under control. None of the markets are crashing around the world. We're not having a ridiculously deep recession. And then the governments can start to stimulate demand again through rate cuts and potentially, kind of get through this Goldilocks sort of outcome that they're hoping. And so I think around the world, that's what is looking likely happening. But I guess we could still see, I don't know, an energy crisis. This is something that I just spoke to Louis Christopher about on an episode. And, that could lead to, through the war and issues around the world and that could lead to inflation again. And so I don't think we're out of the woods yet, but I do think that the inflation, getting the genie back in the bottle, is looking likely, and in Australia as well. And if that's the case, does this slowdown in house prices, which leads to our third story, actually allow the government to do some significant cuts? Because if the housing market was still steaming on at the growth rates that we were seeing earlier in 2023, it'd be really hard for them to cut, because they would say, well, we're just going to create more asset price inflation, which would create more wealth effects. People would feel more wealthier, then they would start spending, and it'd be hard if we could potentially see more inflation issues. But I think this real slowdown in housing is also allowing the government to cut and also allowing APRA to step in when rate cuts come to stimulate housing demand again.
It looks that way. I think, yes, if you look at sort of auction clearance rates in the last 2 or 3 weeks, definitely easing off. I think we had about 3,000 auctions over the past week, according to CoreLogic, and the clearance rates are dipping away, especially in Melbourne and to some extent Sydney. I think you've touched on this before. That's not unusual for this time of year. We get a lot of people listing their properties at auction in that sort of spring, summer, early summer period, and you get more supply come on and the buyers get dispersed. I think actually CoreLogic said that Melbourne prices were down, which caught a few headlines in November. But when I say down, that's 0.1%, right? It's not really material, but it does sort of point to a general, at least slowdown in the momentum. I think, though, if you look at some of the other providers, PropTrack had prices basically back at record highs. There was still rapid price growth in Perth. Adelaide still rising, Brisbane still rising. Domain had for a third consecutive month rental vacancy rates at an all-time low. So, yeah, I think certainly some of the heat's come out. I think the financing figures for October actually showed a 5% jump in home lending, and it's not refinancing anymore. This is actual activity in the market. This is home buyers coming back, some investors getting involved as well, although we know some are still selling. So I guess though those October numbers, they wouldn't have been dampened by the latest rate hike, so I wouldn't get too excited. But it does seem that, maybe we've seen a rapid rebound in housing prices that's run far ahead of what you might have expected, probably driven by the record immigration, low supply levels, but maybe just running out a bit of steam as we run into Christmas.
Yeah, I do think that's the case. I sort of could see that borrowing capacity is really stretched. There is some intergenerational wealth there, but the amount people can borrow is, very limited. And because prices have gone back up, their borrowing capacities have actually gone down further. Even that rate increase in November reduced their borrowing capacities a little bit more. And I don't think their confidence around employment is there like it was in earlier 2023. The return to work, people getting mandated to go back to the office. They are starting to see redundancies. They are starting to see the bonuses aren't there. Hiring isn't as strong. Job advertisements aren't as prolific as they were in the start of the year. And so I do think that that desire to really enter the market at all costs. And because prices have gone back up and quality listings aren't there, I just can see that, that's why I think auction clearance rates aren't like they were. That's really the desperation meter for the market in my mind. And when I start to see that drop, I think, you know what, buyers are being a bit more picky here. They're going to wait for more quality assets. They're not as desperate. In saying that, though, buyers are still there. We still saw a lot of purchases in November, and but I don't think they're just rushing to buy anything at all costs. And I think that's why house lending has gone up, because a lot of the pre-approvals did want to transact in that last 3 months in spring, but that there's the pressure with borrowing capacities is really there, and I don't think people can just leverage up like they would in say 2021 when borrowing capacities were really relaxed.
That does make sense as a macro kind of picture. Are you seeing any other interesting trends at the coalface there as a mortgage broker? Any sort of trends in borrowing? It does seem from the latest figures that big rush to refinance is now kind of passing, I suppose, which I guess in turn suggests that the fixed rate cliff has more or less run its course. Yeah,
we've still got I can't even think of many loans in arrears in terms of our whole book. It would be like 1 or 2 out of 1,000 plus. I do think there's an inequality debate that's really going to get worse in the next few years. Jarden released some research this week, which I was reading, and just the percentage of borrowers on the higher income, the 2 to 500, 500 plus has been going up dramatically, while the borrowers on lower income's been falling. And so what it's basically showing is the only people who can transact in this market is if you're on a higher income. Generally speaking, they're also the ones who are getting intergenerational wealth. And so I think the people who are getting advantage of this boom and this bounce back are the people in the market or people entering the market now. And they're the people on the higher incomes. And I think this inequality debate is going to really kick off in the next few years, because people are going to get priced out of the market in terms of they just haven't got enough income to enter. And this is what Shane Elliott at ANZ sort of been peddling a little bit. And I think the reason he's doing that is he wants borrowing capacities to get relaxed. And that means that he can lend more money, basically. And so he's basically saying home loans are for the rich, properties for the rich, and that type of rhetoric story is because the stats are proving that unless you're on higher incomes, you're not entering the market. And I think that's the key thing that's happening at the moment if we look at our borrowers.
Yeah, I think that's true. I think there's definitely going to be a push next year, I think, for a relaxation of that 3 percentage point lending buffer. There'll be a lot of people, the HIA, Housing Industry Association, is already talking about interest rates being too high, and it's killing the construction sector into a recession for next year. So the push will be on next year. I guess the more we get some sort of downward pressure on inflation, the more hold that narrative may take. So just to recap on the 3 main news stories this week. So firstly, rezoning changes afoot in New South Wales. So the economists have got their desire, and that is big changes proposed for zoning in New South Wales, particularly around train stations and close to some of those key amenities. So we'll see whether that has an impact on approvals. At the moment, anyway, approvals for attached dwellings are very, very soft, way down on where they were in the previous cycle. So I guess that may prove to help over the next few years. Secondly, the global inflation pulse starting to fade. Big shift in markets over the past month or so. I think you can starting to see this in things like gold and Bitcoin and stock markets. People are anticipating those interest rate cuts for next year ahead of time because markets tend to look forward. And thirdly, the housing market just limping into Christmas. I think a bit of buyer fatigue setting in, a lot of supply still to be absorbed from the auctions, but not so much new supply coming on. So I think that's about it for this week. So, Chris, I saw another humongous win for Liverpool this week. Sensational goal from McAllister, if you're following the Premier League, as I know you are. My top tip for this week is if you do get the opportunity to record some videos of your daughter learning to swim, get yourself a Flickr account or somewhere to store it, because you'll love looking back on that in a few years' time. Just so the benefits of my grey hairs there, it's definitely something you look back on and treasure.
Yeah, absolutely. We went to go camping this weekend up in Glenworth Valley. It's just north of Sydney. You know, you go quad biking and horse riding and lots of activities. But it's going to be 38 degrees on Friday and Saturday. And I don't think I want to be in a $300 tent in 38 degrees. So we're actually going down Thirroul, Ostomer Way with a group of friends.
Yeah, that's probably a bit more hospitable. Last time we went camping was in the Blue Mountains or camper vanning, and it was a lot colder than 38. I can tell you that much. So do, as always, send us in your questions. We always like to cover whatever you send in, because we like to cover what's topical and what you're interested to hear about. We do a Q&A podcast every so often as well. You can catch me at Pete Wargent Blogspot or at Pete Wargent on Twitter. That's my daily blog you can catch me on. And Chris, people can track you down at Blusk as usual, I guess.
Yeah, absolutely. Check down in the show notes. Hundreds and hundreds of people have come through and spoke to the team now. And we're working all the way up to Christmas. We're having a couple of weeks off in that Christmas break. So, don't be afraid to get in contact, even though it's getting late in the year. We've still got heaps of capacity to talk to people. So, reach out, and we look forward to chatting. Have a great Sunday, everybody, and stay well, Pete, and I look forward to chatting next week.
Cheers, Chris. Take it easy.